Hello, and welcome to another video from StageAnalysis.net. Today's video is the weekend update of the major US stock market indexes and indicators, where I'll go through the major US stock market indexes plus the key market breadth indicators, such as the Bullish Percent Index, the new highs, new lows indicators, the advanced decline line indicators, the percentage of stocks above their key moving averages, and some custom indicators exclusive to StageAnalysis.net, including the sector breadth chart with relative performance rankings of the major sectors and the point and figure breakdowns minus breakouts minus breakdowns charts. The purpose of this weekly market breadth update is to help determine where stocks will go next, based on the combined signals of all of the market breadth indicators, which are referred to in stage analysis method as the weight of evidence. To see more of the market breadth charts and our daily breakout stocks watch list, go to stageanalysis.net. And to get all of the latest videos, subscribe to the YouTube channel, and please hit the like button below the video on the YouTube page and leave any comments below. Okay, there are a number of charts to get through today, so I'll do a quick run through without commentary of all of the charts for people that are short of time, which will take around 3 minutes, and then go through some of the most interesting ones in more detail. A quick disclaimer. All stock charts and ideas are presented for educational purposes only, so always do your own research before making any trades. Let's begin. So we'll start tonight with the indexes. So this is the S&P 500, the NYSE Composite, the Nasdaq Composite, this is the Nasdaq 100, this is the Dow Jones Industrial Average, this is the S&P 600 Small Caps Index, this is the spot gold chart, this is the light crude oil chart, this is copper. So now we're into the market breadth indicators. So this is the NYSE Bullish Percent Index. This is the Nasdaq Composite Bullish Percent Index. This is the S&P 500 Bullish Percent Index. These are the moving average breadth indicators. So we have, on these charts, we have 3 indicators. So we show the 200-day moving average, the 150-day moving average, and the 50-day moving average in order to show long, medium, and short-term time frames all in one chart. So this is the NYSE, percentage of stocks above their moving averages. This is the Nasdaq. This is the S&P 500. This is the Nasdaq 100. This is the Dow Jones Industrials. This is the S&P 600 Small Caps. Okay, these are the NYSE Advanced Decline Line charts. This is the Cumulative Advanced Decline Line with a 50-day moving average. This is the Cumulative Advanced Decline Volume Line with a 50-day moving average. The Nasdaq Cumulative Advanced Decline Line with a 50-day moving average. The Nasdaq Cumulative Advanced Decline Volume Line with a 50-day moving average. These are the momentum oscillators for the advanced decline line. So we have the 10-day moving average momentum index and the 200-day moving average momentum index below. This is the Nasdaq, same one, so 10-day and 200-day. These are the NYSE McClellan Oscillator and Summation Index. So this is the oscillator and the summation index. This is the Nasdaq version. Right, these are the NYSE Advanced Decline Line EMAs. So we use the 10 and 30-day EMAs. The crossovers are signal points on these charts. So this is the Advanced Decline Volume Line, the Nasdaq Advanced Decline EMAs, and Nasdaq Advanced Decline Volume EMAs. So this is the NYSE 52-week new highs and 52-week new lows. The red area is the new lows and the grey area is the new highs. This is the Nasdaq version. Grey is new highs, red is new lows. This is the cumulative result of those charts. The black line is the cumulative line, and the red line is the 50-day moving average of that cumulative line. And behind we have the daily moving average, new high, new lows. This is the momentum oscillators of both. So this is the 10-day at the top, and this is the 200-day at the bottom. And this is the 5-day total of the new highs minus the new lows. Next we have, this is the sector breadth charts, where we have the percentage of stocks above their 150-day moving averages, which shows the different sectors and what percentage of stocks are above their 150-day moving average, and the total down the bottom here. This is a visual representation of the sectors, as you can see. So, for example, financials is in the 80% range, technology is in the 70% range, energy is in the 50% range. And down the side here we have the different rankings. So when more than 60% of stocks are above their 150-day moving average, they're in the bullish phase, whereas if they're below 40%, they're in a bearish phase. So, and once they get to obviously lofty levels, they start to get to overbought levels. Next, we have the cumulative point and figure breakdowns minus breakouts, breakouts minus breakdowns. So this is the same. This is just the daily version, and this is the distance above the 20-day MA. This is the 10-day moving average of those, the 20-day moving average of those, the 50-day moving average of those, and the 200-day moving average of those. Okay, let's go back to the beginning. So that's the run through. So next we're going to begin with the indexes. So the major US indexes have been running very hot recently. We've been moving up higher since the October lows here, and it's getting quite extended from its key 30-week moving average now. If I applied a Keltner channel to this, it's popped out of the 3 times the Keltner range for the first time in a long time, and that's quite a rare occurrence. So we are running a bit hot at the moment, but markets continue to new highs. Nasdaq's running equally strong. NYSE, I mean. The Nasdaq 100, the Dow Jones, new highs across the board. The small caps, we started to get a little bit of a pop this week. It made a small continuation breakout after making a stage 2 breakout at the end of November time here. So we're now moving into stage 2 in earnest a little bit here. Its relative performance still remains weak against the S&P 500. So, but that's definitely one to keep an eye on, as with the large cap markets quite extended and the small cap index is not, we could see some rotation with people moving out of the large caps and into the smaller cap stocks. Okay. Next we got gold. As you can see, the 2 weekly, we've got this obviously thrust above to try and make a stage 2 continuation, and then rejected and pull back here. Looks like it's been rejected again, and we've made very little movement for the last 2 weeks, and we've settled below this resistance level. So where this goes next, it's anybody's guess, but we could see another stage 2 continuation breakout, or we could consolidate further here. Oil's pulled back to the 30-week MA here, which is flattened out, but it remains within a stage 1 range here and underperforming the market. Copper remains in early stage 2. Didn't make a little continuation move this week, and it's still below quite significant resistance from earlier in 2019 and underperforming the S&P 500, as we can see. Next we've got the NYSE Bullish Percent Index, which is often referred to as a head coach. So we're just literally sitting below the key 70% level here. So it's the first time since the breakdown in early 2018. So it's moving towards the upper zone. But it's not yet oversold by any means, as it can move much higher into the upper zone. So the only one that is if we move through this is the Nasdaq, which is in a similar position, but the S&P 500 Bullish Percent Index is at a lofty 83%, so which puts it well into the upper zone. So I'll be watching this one closely, as it's rare for it to stay at such extreme levels for a long time, as it often tops out in the mid to high 80s, which if we look back at a 20-year chart of the S&P 500 Bullish Percent Index, so I've highlighted with this red line where we are currently. So as you can see, it's quite rare for it to get much higher than this. There's only been 1, 2, 3, 4, there's been less than 10 moves in the last 20 years above this level, so we could well see it top out in the short term soon, which doesn't mean it's going to crash. It just means we might get some consolidation. But generally, as we can see from these moves to these levels, the initial moves to these levels generally are very early in a bull market, so it's actually a very good sign that it's actually up here. So we'll be looking for a consolidation or a pullback soon from this one. So let's go back next. So next we've got the NYSE percentage of stocks above their key moving averages. So as I said, top one on the previous bit, top bit is the 200-day moving average. So for example, the percentage of stocks currently in the New York Stock Exchange above their 200-day moving average is 74.63%, which you can see up here, which is a new high for the last 2 years. So 150-day is almost at 78%, and the 50-day is at 79% here, which is obviously a short-term high since early 2019. But the long and medium-term indicators here are hitting quite high levels for this. I'll show the S&P 500 long-term chart of this in a minute. So let's have a look at the Nasdaq first. Nasdaq is much weaker actually in this one, because I'm not sure why. It is obviously the makeup of the stocks that are in the Nasdaq, but the 200-day is only just moved into the bull territory above 60%, and the 150-day moving average is at 66% here. So with only the short-term one moving above the key 70% level. So if we look at the S&P 500, obviously this is much stronger. We've got 87%, 87% and 83%, so with new highs for 2-year new highs in the 150-day and 200-day here. So if we look back at a long-term chart of this, a 20-year chart, I've highlighted with a red line here the level we're at currently, and then you can see, obviously, compare it to the past and obviously the points that we've got. So obviously 2007, this was an area where we topped out in early 2007. Obviously the market continued to run at that point for a while. 2009, obviously with the initial thrust above this level, was the beginning of obviously the bull market. 2011 was another area where it topped out. 2013 was another area where we were early in the bull market phase. So obviously this is an area where we normally, with all three of them hitting quite lofty areas, we would expect some kind of consolidation or pullback soon, I would imagine. So let's go back to the major charts. I'll just flick through these ones because we've got all the others, the Nasdaq 100, Dow Jones, and the small caps. So next is the advanced decline line. This is the cumulative advanced decline line. As I said on previous videos, we don't look at these advanced decline lines in isolation. There's 4 charts, which is the advanced decline line, volume, and then the Nasdaq and NYSE versions of these. So this is the NYSE cumulative advanced line, which is, as you can see, still running to new highs with no sign of anything yet, but it is quite extended from its moving average, so we could expect some kind of pullback in that. This is the cumulative advanced decline volume line, again hitting new highs and fairly extended from its normal peaks. So this is the Nasdaq version, which is running strongly as well, and the Nasdaq cumulative advanced decline volume line version. So all 4 running strongly, so remain on a bullish signal. Next, we've got the momentum oscillators for these, which is the 10-day moving average momentum index, which is a short-term indicator, and 200-day moving average momentum index, which is the long-term version. So these obviously show short-term peaks and highs, troughs. So best time to buy with the short-term one is obviously pullbacks to the 0 line and rebounds off, or obviously once it gets to lower levels where it's around its average sort of ranges. So at the moment we're in sort of middle after a pullback, and momentum index is showing some weakness after peaking in October. So these new highs are got a bit of divergence going on here with momentum waning. This is the Nasdaq version, showing the same sort of picture. These are the Oscillators and summation index, which So it broke out in December, the summation index, and again, similar sort of picture here. This is the NYSE, same picture. Right, these are the NYSE advanced decline line 10 and 30-day EMAs, which basically these show signals on crossovers. And again, we have 4 charts, 2 for the NYSE and 2 for the Nasdaq, and it's the combined. I use signals as combined from all 4. So this one currently has been on a bull signal since June. Got the advanced decline volume, which has been on a bull signal since October. The Nasdaq has been on a bull signal since October, and the Nasdaq volume, which has been on a bull signal since October. So again, all 4 remain on a bullish signal. So weight of evidence for these indicators remains bullish. Next is the 52-week new highs minus new lows. Now, as you can see on this chart, we had a extreme pop at the end of the week here to 681 on the NYSE new highs versus the new lows. The red ones are the new lows and the grey are the new highs. So I will show a 20-year chart of this in a minute. Let's have a look at the Nasdaq. So much less extreme on this. It's still showing some good strength since December low. Next, this is the cumulative US new highs minus new lows with a 50-day moving average. See, we're starting to get fairly extended from the 50-day moving average now, so it's running a bit hot. So next we've got the momentum oscillators for both, which is the 10-day moving average and the 200-day moving average. So as you can see, it's popped out in the 200-day, popped out in October, and the 10-day has been above its zero line since October here as well. Just moving to new highs. Right, this is the one I was talking about. I'm going to show a long-term chart of this as well. So as you can see, we're running very hot with new highs currently. This is the 5-day total, which smooths out the result a bit. So this is a 20-year version of the same chart. I've added the red line of where we are currently. So as you can see, obviously breaks the amount of new highs hitting this level in 2003. Here pops out to this level. We had a bunch of these. It obviously was the start of a new bull market. Obviously pops to this at other times in 2005, 2006 and 2007. So also in 2010, 2013 here and 2017. So the majority of the time pops to these levels signal a strong bull market and more to come really. So it's only once we start moving down and diverging from this that we normally signal that the end of a bull run. So it seems like this is a positive currently, but obviously we're nearing short-term blow-off bits for this. So we could in fact get, obviously they all seem to have strong pullbacks after that. So we could well get a pullback soon. Next, let's have a look at the cumulative. The screen there. Let's have a look at the cumulative point and figure breakouts minus breakdowns in the US market. So this broke out above its summer range in October time and has been running strongly above its 20 and 50-day moving averages. We're getting back to the 2018 levels now. So the cumulative line is looking very strong for this, and this is one I use for my market timing because I find the point and figure charts are very, very good at being, because they don't include any kind of weighting. It's just a total of the stocks in the US market, like making point and figure buy signals. So it's a very good way to time the market. This is PNF breakouts minus breakdowns on a daily basis. You can see with a 20-day moving average laid over. That moving average, so these next charts, this is the 10-day moving average with the daily breakouts hidden. And this is the next is the 20-day, which showed on the previous chart. This is the 50-day, and this is the 200-day. So all of these remain in strong position. So next, let's have a look at the percentage of stocks above their 150-day moving average on a sector basis. So this is one of my favourite things to do, because it shows the percentage of stocks that are in, whether they're in strong position and what sectors are actually showing strength and showing weakness. So at the moment you can see this week utilities moved back to the top of the chart, as it had a 12% gain, and it's now 83% of stocks in the utility sector are above their 150-day moving average. So it's in the what would consider overbought territory, but obviously strong bull territory. Same with financials, and 82% of financial stocks, which is the biggest sector, I believe. So obviously indicating the strong bull market we're in currently, followed by technology at 78%, and then industrials at 76%. And healthcare, energy has been the weakest stock all year, and only recently broke above the 50% level. We'll pull back again this week, and it's the only sector going down this week. The average has moved above 70% for the first time this year. It's now at 72%. So let's have a look at the visual representation of this, because it gives clearer indication than the table. So I include the NYSE and Nasdaq 150-day percentage positions here, and down the side here I've created my own little range of when a stock is above 60%, it's in a bullish range. When it's above 50, it's in a neutral plus. Below 50%, it's in a neutral minus, and below 40%, it's in the bear zone. So best time to buy is always when all of the sectors drop below the key 30% level, and then stay below that level for a little while, and then the best time to buy as they break out again back above the 30% level and start to move higher back above 50% again. So currently we're in obviously a strong bull phase, so it's not a good time for an investor to be buying at this point, because we'd want to see some sort of pullback, but we are in a strong bull phase. And obviously, as you can see, we've got a few sectors starting to get into overheated territory, but for the most part we're just in the majority of the sectors, and the two market indexes are showing that we're in the bullish zone, because all stocks, well, almost all sectors are above the key 60% level. Okay, I think that is the lot for tonight. Let's go back to the beginning. So thanks for watching. Please subscribe to the channel if you want to see more of this. And obviously make sure you like the videos, as it helps YouTube obviously make them found. So, and if you want to leave any comments, go to the YouTube channel and leave the comments below, or go to stageanalysis.net and join the forum, and you can obviously chat on there with other people talking about this in the same way. Okay, I'll see you next time.